and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Anna Edwards in London, in for Francine Lacqua this morning. We start the conversation today in South Korea. South Korean officials have said, South Korea says officials from the United States and Boeing arrived today to join its investigation into the Jeju air crash. 179 people were killed in Sunday's accident, making it the deadliest passenger airline disaster in the nation's history and among the worst globally this decade. Bloomberg's Asia Aviation reporter Danny Lee joins us now, and you've had more than anybody would want to have to focus on of this nature as we bring 2024, Danny, to a close, not just in South Korea but elsewhere. But let's start with South Korea. What can we expect then from the investigators as the investigation gets underway?
So they have to work with the investigators. They have to work with a damaged flight data recorder and also an intact cockpit voice recorder. These are part of the black box, and these really hold the critical clues. And as they start to be analysed today, it's going to be important to see whether the damage for the flight data recorder is severe enough and whether that needs to be taken outside of Korea for more careful analysis. And so, no, this is a step-by-step process in this going to be what is going to be a long, drawn-out investigation. But investigators ultimately have to assess what happened at the point when the pilot made the mayday just a minute or two before when the warning was given by the airport in the country south of a risk of a bird strike, and then all of the event as we've seen play out of the bird strike, and then this landing, this dramatic landing, this plane coming into the airport at high speed and then ultimately going to the end of the runway and crashing, which is part of what killed 179 people.
Yes, indeed, and a lot of focus, no doubt, on the role of the bird strike, but also the landing gear and what was going on with the landing gear at the time. So how is this playing out across the broader aviation industry?
Well, when we see this crash, clearly, when you look at the numbers, this is, this year, 2024, has been quite a grim year. The most fatalities in commercial aviation in around 6 years. And so when you look at the broader spectrum, these crashes shouldn't really be defined by the true horror of it, the fact that ultimately aviation being a safe form of transportation. And yes, the number of accidents, incidents and events compared to 2023, in fact, the fact that for large airliners in commercial aviation, the fact that there was no fatalities in 2023, a lot of these incidents and events do get accentuated, and clearly a lot of scrutiny, particularly on South Korea and on Jeju Air, which also had a bit of a scare this morning.
Right, yeah, so no doubt there will be a lot of focus on this investigation. But the aviation sector, as you point out, has had a really tough 2024, and we've seen fatalities as a result. Let's go to another recent crash, which was in Azerbaijan. What do we know? What more do we know about the aircraft that crashed on December 25th in Azerbaijan and the role of Russia?
Yeah, I mean, this air crash, it really marks a grim 7 days in aviation, frankly. But we heard more, and significantly, the fact that Russia apologized to Azerbaijan for this, what is called an accidental shooting down of this aircraft. And whilst they didn't directly say that they did take down the plane, the fact that they stepped forward, and particularly Vladimir Putin, Russia's president, engaging with his Azerbaijani counterpart on this. And whilst Russia has stopped short of formally apologising, it has been more upfront on this, particularly given the kind of evidence there is at hand. But quite a significant kind of tone from Russia in its engagement here.
OK, Danny, thank you very much. Thanks for joining us. Our Bloomberg Asia Aviation reporter Danny Lee with the latest on those crashes. Now, sticking with South Korea, investigators are seeking a warrant to arrest President Yoon Suk-yeol after he failed to appear for questioning for the third time over his martial law declaration earlier on this month. If that warrant is granted, Yoon could become the first president in the country's history to be arrested while in office. Finance Minister Choi Sang-mok is currently the interim leader after acting President Han Duck-soo was also impeached, deepening the political crisis. The political turmoil has seen a market rout in South Korea, with the country's stocks, bonds and currency among the worst performing assets in Asia. We have for you their performance since over the past month or so, and you can see the underperformance that we've seen of various South Korean assets, whether you're looking at stocks, a lot of nervousness in FX markets as well as a result of the very brief martial law that was called on December 3rd and the political movements that have happened since then, of course, keeping markets and investors on their toes, looking for some clarity and some resolution. Let's get back to one of our other top stories this morning. In the United States, January 9th has been designated a national day of mourning for former President Jimmy Carter. Carter died at his home in Georgia, aged 100. The one-time peanut farmer leaves a legacy of promoting human rights and peace after a single term in office that faced challenges, including soaring inflation and a hostage crisis in Iran. The longest-living former U.S. president will receive a state funeral in Washington, though the date for that has not yet been announced.
Today, America and the world, in my view, lost a remarkable leader. What I find extraordinary about Jimmy Carter, though, is that millions of people all around the world, all over the world, feel they lost a friend as well, even though they never met him. And that's because Jimmy Carter lived a life measured not by words, but by his deeds.
President Biden with his reflections there. For more, let's bring in Bloomberg News desk editor Jill Desis, who's in Hong Kong for us. Jill, of course, there's a lot to think about when it comes to his presidency. That only lasted 4 years, but the post-presidency period was marked by a lot of activism and a lot of recognition for his work. So what lessons do people take when they look back at Carter's presidency?
Yes, that's certainly right. I mean, look, you're looking at a president that was very well defined by a lot of his respect for dignity and humility, and ultimately, as you said, a lot of the work that he ultimately did after leaving the presidency. So Jimmy Carter's term in office, his only term in office, was marred by several major challenges. Obviously, huge challenges involving inflation. Then it's really the Iran hostage crisis that kind of characterized much of the end of his term. He lost in a pretty humiliating political defeat to Ronald Reagan, but then went on to, spend the next 4+ decades of his life, the longest of any, president after leaving office, to go on to do some really incredible things. So through the Carter Center, was responsible for building up, quite a lot of major human rights efforts. He did a lot for global health in particular, led to the near eradication of, some pretty significant disease. So you see really in Jimmy Carter somebody that, had a term in office that really was characterized, by, some of these major political obstacles, and ultimately, contemporaneously wasn't really, seen to have a very well-received presidency, but then ultimately did a lot of that work after the fact.
OK, Jill, thank you very much. Bloomberg's Jill Desis with an update there. And we'll have plenty more on President Carter's passing and his legacy over the hours ahead. This is Bloomberg. Welcome back to The Pulse. I'm Anna Edwards, in for Francine Lacqua here in London this morning. Let's talk about inflation. And Spanish inflation rose more than expected to 2.8% this month, staying above the euro area's 2% target for the second month. Europe is dealing with sluggish growth, low productivity and political problems in its two largest economies. That's France and Germany, of course. That's on top of potential trade tensions with the second Trump administration in the United States. Investec economist Ellie Henderson joins us now to think about the global economy as we bring this year to a close and head into next year. Ellie, nice to have you with us. So let's start with Europe, as we focused in on the Spanish reading there. That came in a little ahead of expectation. And I wonder how useful that is as a reminder, a little prompt about that narrative that the last mile of inflation is perhaps the hardest. And we've done a lot of work globally in bringing down inflation from those really elevated levels of 2 years ago. But still, there is work to do in some places, or perhaps renewed work.
Yeah, definitely. There has been a lot of progress made. We've come down from the double digits inflation that we've seen in various jurisdictions, closer to target, but it's not going to be a straight path from here to hit inflation sustainably at target. It's going to be a bumpy road. We're seeing wholesale energy prices starting to rise, and that will likely push inflation higher across the globe over the coming months. And that does reinforce the message, like you say, that it's not one straight path. It will go up, it will go down from here. But I think broadly, inflationary pressures are still on track to move to target.
And what would you expect to see in terms of inflation? So you say that they're going to come down to target. Is that for the Eurozone? I think you were speaking there. So they'll come down to target. Is there a risk that they go lower than the target? We were hearing from Klaus Knot, a Governing Council member at the ECB, of course, and he was talking to a Dutch paper just this morning, saying that there's a risk that China exports deflation to Europe. If it can't export quite so much product to the United States, some of that will come to Europe. Is that how you would expect the European inflation narrative to progress during 2025?
Yes, definitely. I think there's upside risk to inflation and there are downside risks. The downside comes from the fact that, as you say, the two biggest economies, Germany, France, haven't had the most brilliant year in terms of economic performance. And the upside risks come from the potential impact of Trump tariffs if there's retaliation. But you hit on a good point in terms of China. If China's export market to the US is hit, it may have excess supply that it may have to dump in other markets, which countries around the globe will probably be watching.
Yeah, indeed. And so we'll see. I suppose a lot might depend on the order in which these policy initiatives come from the White House as to what kind of impact they have next year, and also how other countries respond, because the part of Klaus Knot talking this morning about fears around a trade war, well, part of that will depend on what the US imposes, but it might also depend on how other countries around the world respond.
Yes, definitely. And I hate to say that next year is very uncertain, because I feel like ever since I've been an economist, the world has been unbelievably uncertain. But next year, we don't know the specifics of the Trump policies that are coming in. We've heard rumours, speculation, whether it be a 10% universal tariff, 25% on Mexico, 25% on Canada. But we don't know the details of that, and we don't know how other countries will respond. We're not sure whether Trump is using the threat of tariffs as a negotiation tool to win some concessions, or he will follow through on some of those things. And unfortunately, we will only have greater clarity once that pen is put on the paper.
Yeah, and what about the inflation outlook in the United States then? Because inflation could be driven higher by tariffs. We had a conversation a couple of hours ago around this desk talking about whether gas prices in the US might drive inflation higher in the United States as well. Is there more upside risk in the US on the inflation story?
Yeah, we have penciled in an upside lift from the Trump policies. I think there's various Trump policies to discuss. It's not all about tariffs. It's also about deportations. If he follows through with some of that, we could see labour shortages. We could see wage growth, which would also be inflationary. And he's also being handed a very strong economy, which we shouldn't forget, the economic backdrop that we've got now, that also poses some upside risk to inflation. And because of all of that put together, we've actually changed our Fed call since the election, and we think the Fed will just cut rates one more time next year in March and then stop and assess the outlook.
OK, so we have to wait till March until we get another cut, and then only one. Is that, I mean, there are some on Wall Street who will say, well, we're still going to get more cuts, that inflation is not as high as it was, and we don't, the policy is too restrictive, essentially. Even if inflation is maybe still above target, policy is too restrictive. That's not an argument that washes with you, then?
It certainly is. I think there's a lot of arguments on Wall Street because everyone is making different assumptions on what Trump policy will look like. There are so many known unknowns, and forecasting Fed policy at the minute is really difficult. And I think you actually saw that at the December press conference. In November, Fed Chair Powell, I think the famous quote was, "We don't speculate, we don't assume, we don't guess," or something in that order. And in December, actually, some board members had put some idea of Trump policy into their forecasts. So everyone's trying to interpret it differently and coming up with different Fed forecasts because of that. But on our assumption of it, 10% universal tariff and some sort of deportation effect, we see the Fed cutting just once next year.
Yeah, I mean, some might call them educated guesses, other people call them assumptions, and when you're trying to work out what's going to happen next year, you might have to go some way to try and make a judgment as to what you think President-elect is going to do in terms of policy. Let's bring things a little closer to home once again then, Ellie, and think about the UK. There's an expectation that we maybe don't see quite so many rate cuts in the UK as we do in the Eurozone. To what extent is that going to be the driving force for the UK economy? What's in focus for you?
We would agree with that assumption that the Bank of England will cut less. I think the mantra from the Bank of England has been a gradual, measured approach to policy easing. I think that will stick going forward. The economy has broadly evolved as the bank was expected. Maybe it has been a touch weaker, and inflation still seems like it will be trending towards targets. We think that allows a gradual approach, but that maybe oversimplifies the dynamics on the committee. We saw last month in a surprise move that 3 voted for a cut, and that was more than many had expected, particularly after some strong wage data. So maybe we have to look at that reaction function again on the committee. Yeah,
that is interesting, isn't it, that we got those 3 voting for a cut. We had the strong wage data, which made people alarmed a little about what that means for inflation. But then since all of that, we've had some quite weak growth data, haven't we, Ellie? And what does that tell us about the underlying dynamics and recession risk in the UK?
Yeah, I think the survey evidence is becoming more difficult to ignore. It's been quite downbeat. That's largely seemed to be linked to depressed consumer and business confidence. The economy contracted by 0.1% in both September and October. So we're starting the new year in a position where momentum is subdued. Will that continue into next year? It's possible. But on the aggregate, household balance sheets are still relatively healthy. We've got the Bank of England cutting. So there are supportive factors there. But we'll have to see how the environment evolves.
Ellie, thank you very much. Thanks for joining us. Ellie Henderson, Investec economist. Plenty more still to come on The Pulse this Monday. This is Bloomberg. Welcome back to The Pulse. I'm Anna Edwards in for Francine Lacqua today. Now, recapping on one of our top stories this hour, South Korea says officials from the US and Boeing arrived today to join its investigation into the Jeju air crash. 179 people were killed in Sunday's accident, making it the deadliest passenger airline disaster in the nation's history and among the worst globally this decade. There clearly remain many unanswered questions about what exactly happened here surrounding the South Korean plane disaster. Investors, though, are expressing some early concern, with Boeing shares down about 4% in pre-market trading. Turning now to other news this morning, and in the tech sector, Ibiden, the Japanese supplier of chip package substrates used in semiconductors made by NVIDIA, says it may need to increase production capacity to keep up with demand. CEO Koji Kawashima told us exclusively that sales are robust as his company builds a new factory in central Japan.
Right now, we are receiving more orders than we have capacity for, and we have not been able to cover all of them. We are planning on starting a new factory next year, but it is likely that it will only be able to contribute from the second half of the year. Since demand is expected to increase more in the first half of the next year, the major issue is how to support the increased demand during this 9-month. And we are currently making preparations for this at our existing plants.
Coming up on the programme, European leaders are bracing for the impact of potential Trump tariffs as well as domestic political upheaval. We'll discuss the outlook for European politics. This is Bloomberg. Good morning and welcome to The Pulse. I'm Anna Edwards in London, in for Francine Lacqua this morning. Here are your top stories. South Korea investigates its worst ever civil air accident that's killed 179 people. Analysis of the black boxes will begin today as officials focus on a bird strike and the unusual failure of landing gear. European natural gas prices hover near the highest level this month, with the transit agreement between Ukraine and Russia set to expire. Storage levels are also depleting faster than normal. And former US President Jimmy Carter dies at his home, aged 100. January 9th has been designated a national day of mourning. Away from US politics and back to Europe and the political challenges ahead, low productivity and failure to invest have led to vast amounts of lost growth in the EU. With France and Germany in political crisis, the continent risks more lost years of stagnation, as our Bloomberg Originals documentary explains.
The news for Europe just keeps getting worse.
The French government collapses, plunging EU's second largest economy into turmoil.
France's political upheaval in December offered another glimpse at fractious European affairs.
Germany's under pressure and Volkswagen workers are striking hard.
In my view, we are already in a crisis mood.
Our former model is over. If we follow our classical agenda, we will be out of the market, I have no doubt.
The EU's economy is now fighting for survival and struggling to keep pace with the US and China.
Had the European economy grown as fast as the American economy over the past couple of decades, we'd be generating 3 trillion euros of extra income every year.
That's roughly the equivalent to the total GDP of France being routinely added into the economy.
Europe needs to have a digital era economy with companies that challenge those from China and from the US.
Without that, the region's at risk of being unable to afford to protect itself in a world where security is no longer guaranteed.
It's just a very tense moment for the world, and Europe's at the center of it.
That's a shortened version of that particular report. You can watch the full Bloomberg Originals documentary on YouTube and on the Bloomberg website. Sticking with the European growth challenges and other challenges for 2025 in Europe, an election in Germany, ongoing political instability in France, and the third year of Russia's war in Ukraine are just some of the geopolitical issues looming for the continent in 2025. Let's bring in Bloomberg's Oliver Crook to discuss the political outlook for Europe. And, of course, the main event at the beginning of the year is going to be around the German election, Ollie. Tensions rising as we approach February 23rd, not least of which the role of the AfD and Elon Musk weighing in on that front.
Yeah, absolutely. And I mean, listen, it's an interesting sort of moment here for German politics. It's not often that you get so much attention internationally, particularly from the United States, on a German election. We should just say, heading into those polls, now that we have the official date officially, you know, these things have to be triple confirmed, February 23rd, when we look at sort of how everybody is doing here, you know, nothing has changed dramatically in the polls. We're still expecting the CDU, led by Friedrich Merz, at 31% as the sort of leading party right now in Germany. And then the number 2 party, the AfD, the Alternative for Deutschland, the right-wing sort of party here in Germany, that is boycotted, we should say, from all the rest of the political establishment. No one will work with the AfD, which makes it difficult when you consider trying to build a coalition when your number 2 party basically is ineligible to govern with anybody for what they have sort of established. And then Scholz and the SPD there in third. Where it gets interesting and why we're getting more international attention on the AfD is because Elon Musk, once again, out over the weekend, writing in the opinion pages of a German newspaper in Welt, saying the following, saying that the AfD, even though it is described as far-right, represents a political realism that resonates with many Germans who feel their concerns are ignored by the establishment. It addresses the problems of the day without the political correctness that often obscures the truth. And just to give you sort of an idea of how fraught this sort of a pronouncement is, and sort of even publishing the story, the editor of the opinion pages of Welt resigned after this went to press. Of course, to remind some people sort of what the AfD positions are, you know, in our world, one of the sort of ones that really raises eyebrows is that this party, which is now the number 2 in Germany, wants to exit the Eurozone. It wants to exit the EU. And this is also just sort of creating great upheaval within the broader German political establishment. I mean, Elon Musk has called Olaf Scholz, the Chancellor of Germany, a fool. He has been very critical of bureaucracy in Germany. He has potentially more of a sort of leg to do that, given that he has a Tesla factory here just a few miles away from where I'm seated right now. But we heard from the leader of the CDU, Friedrich Merz, who's now leading in the polls, saying that I cannot remember a comparable case of interference in the election campaign of a friendly country in the history of Western democracies, referring to Musk's recent involvement of wading into German politics. Evidently, American politics is not where sort of he draws his final interest now, Elon Musk sort of being a commentator on German politics.
Yeah, we're certainly seeing him weighing in on politics in many parts of Europe, aren't we? And instability in Germany and the political process in Germany, just one of the many events that Europe needs to face down in 2025, I suppose. What else is on your radar for next year then, Ollie?
Yeah, I think that one of sort of the main issues on, I think, everybody's radar is the French budget. When are we going to get a French budget? I mean, not anytime soon from anything that we're sort of reporting, and we can see, maybe mid-February there'll be another stab at it. But again, this just speaks to the heart of some of the issues, that really the heart of Europe, the core of Europe, where you have political upheaval in Germany and in France at a time when you have a lot of things coming towards the European economy and the European political establishment. I mean, the inauguration of Donald Trump in the beginning half of the year has huge implications for Europe. It's going to have potentially huge implication on tariffs. He did say that basically the Europeans might be okay. He wouldn't impose tariffs if you buy more LNG from the United States. But again, we know that these things are very fluid and can change at any moment. But it's not just the economic side of things. There's also the sort of geopolitical side of things. Could he withdraw from Ukraine? There's also the question of Syria, right? This has major impacts on the European economies because of the refugees that have been flowing from there. If the U.S. doesn't want any hand in trying to stabilize Syria, can Europe do it alone? It's a tall order without much leadership here in Europe.
Oliver, thank you very much. Bloomberg's Oliver Crook in Berlin. Let's get another perspective on some of these issues. France is entering the new year in a cloud of uncertainty, as we were just hearing from Ollie. No budget yet. President Macron's influence on the decline. Michel Barnier ousted after a no-confidence vote, and the rise of Marine Le Pen's far-right party certainly in focus. For more, let's bring in Bloomberg opinion columnist Lionel Laurent, who joins us from Paris. And Lionel, I want to think about Paris. I also want to think about Berlin, though, because in both geographies, we have attempts by more established parties to keep the far right from the levers of power. We see that with the cordon sanitaire, I think, in French politics. We see attempts to do the same in Germany. Do you think, broadly speaking, that will hold? We see powerful voices in the United States expressing a different view.
So I think that the cordon sanitaire strategy is obviously getting weaker year by year. I think France is maybe closer to having that crumble because Marine Le Pen is so popular and is so kind of established in mainstream, maybe a bit different to AfD in Germany. I think both France and Germany face some very critical tests in the next couple of months. Obviously the elections in Germany, but in France we have a court ruling soon on Le Pen's eligibility in mainstream politics, which could be a huge turning point in terms of the drama and the polarization that could bring. So I think they're still kind of holding together just about, but it's getting weaker every year.
It's getting weaker and certainly could be tested. And I mentioned some of the loud voices from the United States. We talked to Ollie there about what we were hearing from Elon Musk. And clearly, President-elect Trump will bring his own level of disruption to European politics on a number of fronts, perhaps tariffs, perhaps other things, NATO being one of them. When you think about Trump and the year ahead, Lionel, what should be on our radar? How disruptive is a Trump presidency going to be for Europe?
So there's two questions, right? The first is, does Trump mean it, right? I mean, we don't know at this stage, but clearly his own popularity, his own impact on the US economy, whether inflation gets stoked by tariffs, that's going to decide how hard he hits. And secondly, can Europe stay united? We heard a bit earlier about the idea of, okay, can there be a deal, some kind of quid pro quo to narrow that deficit with the US? But that takes unity. If Trump decides to start targeting individual countries with sectoral tariffs or country-type tariffs and play countries off one against the other, that will really complicate the response. So I hope that there'll be more unity facing this year. The odds are kind of long, but maybe Brussels can get back some of that Brexit mindset and really kind of re-engineer the mindset shift in Europe right now.
We've certainly seen an expression of different views when it comes to Ukraine within Europe, Lionel. And I wonder what the view in Europe is going to be of any proposed ceasefire or however President-elect Trump plans to bring war in Ukraine to an end, whatever that results in. How will that be received in Europe? How ready is Europe for that development?
Not very ready, I would argue. I don't think Europe is at all ready to replace US security and US defence. I think there have been some good tentative signs towards more increased defence spending, but it's still early days. So I think that any sort of hurried truce or settlement led by the US creates a big dilemma. for Europe. I think in the end today, in the short term, it is the size of the European economy and the European market that can play a role here if it can be at the table and pledge financial assistance to reconstruct Ukraine, to rebuild Ukraine, leverage some of those frozen Russian assets. Hopefully Europe can again just recapture some of that unity, that geopolitical wake-up call it needs to hear on Ukraine too.
Lionel, thank you very much. Thank you for joining us. Lionel Laurent from Bloomberg Opinion with thoughts on the year ahead for Europe. Coming up on the programme, a crucial gas deal keeping Europe warm this winter is at a critical turning point. We will have the latest next. This is Bloomberg. Welcome back. This is The Pulse. I'm Anna Edwards in for Francine Lacqua. Now, European natural gas prices are hovering near their highest level this month as a deal to transport Russian gas through Ukraine looks set to expire on New Year's Day. Slovakia is urging the EU to address the looming halt, saying the economic impact of the bloc will far outweigh the effect on Russia. Bloomberg senior reporter Henry Meyer joins us now, and he's been tracking all of this. What are the possible compromises and then that could be crafted here, Henry, to reach some kind of agreement? Because here we've got parts of Europe, those that have been more favourable to Russia and still rely on Russian gas, arguing they want this transit through Ukraine to continue, and the European Commission trying its best not to get involved.
Yes, that's right. I mean, there are two countries which are still very much reliant on Russian gas. That's Hungary and Slovakia. I mean, what we've seen, of course, is European dependence on Russian gas has decreased dramatically since before Russia's invasion of Ukraine in 2022. So now, talks are obviously continuing. I mean, time is running out. There are a couple of solutions which have been suggested. One of them is that these countries would actually acquire this gas as it crossed into Ukraine, so that Ukraine's position that it's no longer going to be allowing Russian gas to transit its territory would be respected. That's one possible solution. The other is that these two countries would start to import gas from Azerbaijan, and under a swap arrangement under which Russia would then supply its own gas to Azerbaijan. But obviously, if the talks fail, what we're looking at, essentially is roughly cutting in half the amount of Russian gas getting to Europe. I mean, it's already down, massively comparing to what it was in 2022. Europe used to buy, 40% of its gas imports from Russia. That's now down to about 15% right now.
OK, and so this is all set to play out within the next 24, 48 hours, isn't it, Henry? Looking a little longer term. Of course, I mentioned the European Commission trying to stay out of this because the Commission wants to reduce the amount of Russian energy that Europe takes overall, and so would rather have a longer-term focus. Also in long-term focus is what happens with Ukraine and the war that is currently taking place there. How likely is it that the two sides can end the fighting in 2025? We know we have a new president arriving in Washington, and he has his own desires on some kind of peace.
Yes, that's right, Anna. I mean, President Trump has repeatedly said that he aims to end this conflict. He said that he can do it in 24 hours. That's, of course, not going to happen. He's already discovering that, the talks are going to be very, very difficult. So, this idea of an immediate ceasefire has already been dismissed by Russia. It's put forward some extremely difficult demands that Ukraine is going to find it, politically very difficult to swallow. It's not only interested in keeping hold of the territory that it controls. Almost 20% of Ukrainian territory is currently occupied by Russia, but it also wants to impose very difficult conditions. One of them is that Ukraine would have to give up its ambition to join NATO, would have to have a neutral status. And the second condition is that Ukraine must agree to very strict limits on its military. And I think what we're going to see is the talks will start. We will have some kind of a peace process as the war continues to rage. But those talks will take a very long time to reach any kind of result.
Henry, thank you very much. Bloomberg senior reporter Henry Mayer. Returning to one of our top stories and sticking with politics, former US President Jimmy Carter has died at the age of 100 at his home in Plains, Georgia. His term in the White House was marked by significant achievements, including brokering a peace accord between Israel and Egypt, as well as economic turmoil at home. Bloomberg's David Weston takes a look back at his life.
President Carter came to office in the wake of Watergate and Vietnam, with a commitment to right the ship of state.
President Carter brought back to government honesty, integrity, and faith in government. He ran as a candidate on a government as good as its people, and he truly did deliver that.
I think President Carter in many ways was ahead of his time in terms of his emphasis, for example, on human rights, in terms of his thinking about alternative energy, in terms of his role in the Middle East peace agreements that he put together. And we all know that his ex-presidency, which has been such a long one, has been graced by remarkable contributions to humanity by former President Carter. I think right now, he is seen very favorably. I'm really happy to see that because he's a very special man.
One of President Carter's biggest challenges was energy in the face of the second Arab oil embargo.
Well, he was president during a very challenging time. As you recall, there was the oil embargo, which drove oil prices up dramatically. That became a catalyst for the highest inflation that we had really since the war, and probably even before that. And so he had to take some very tough fiscal measures. He did appoint Paul Volcker, who, by very much tightening monetary policy, caused a recession, which certainly was not an easy thing for President Carter to run through.
He was the first person to talk about energy and how we had to start looking at renewable energy plans and how our country could invest and incentivize in that area. And I don't know if you remember, but he had a solar panel on the White House, which when he left, President Reagan took down. But he also had fuel mileage standards and, really realized, I think, way before anybody else that we had to start thinking about what climate and what it was doing to our planet.
But as influential as Jimmy Carter was as president, he will be remembered every bit as much for what he did after he left office.
The thing, though, that I think is absolutely most notable about President Carter is we can all debate the relative merits of any individual president's term, but I think it's inarguable that President Carter is the single most impressive, most successful, and most to be admired ex-president in the history of our nation. This is a man who took the responsibilities of being a visible public figure incredibly seriously and was a role model to all of us.
This is The Pulse. I'm Anna Edwards in for Francine Lacqua here in London this morning. Now, higher for longer interest rates have lifted the market capitalisation of major European banks by almost 500 billion euros since the lows recorded just over 2 years ago. But the rally is at risk of stalling amid monetary easing and weak economic conditions across the continent. Joining us now to discuss the outlook for the European banking sector in 2025 is Philip Richards, Senior Bank Analyst at Bloomberg Intelligence. Philip, nice to speak to you. So you highlight European banks have rallied almost 25% year to date. I think if we go back a couple of years, the sector is up by around 52%, and it's the best performing sector in a couple of, well, certainly over that 2-year period for Europe. So if European bank performance has been so strong, what's broadly been behind that?
Yeah, good morning, Anna. A number of factors, actually. Basically, the earnings profile of the banks has been significantly strengthened from negative rates across Europe about 2.5 years ago. And now we're going to hit a peak of 4% in Europe. Obviously, they've come down a bit since then. But that much stronger outlook in terms of interest rates has really boosted the whole revenue profile for the banks. At the same time, cost of risk has been very low. And during the pandemic, the banks took a lot of provisions because they thought the risks ahead. They didn't materialize, and therefore sitting on big stocks of provisions which have been gradually releasing, and therefore the cost of risk has been very, very low. So putting them together, revenue has been stronger, cost of risk has been better, and also the capital position of the bank has been very strong. And that's fueled this whole increase in share buybacks we've seen. And then, of course, we've seen this year a return of M&A to the sector as well. So a number of positive drivers have really driven it.
Yes, and mentioning M&A, I wonder if that's going to feature more next year. What is the outlook for the sector, do you think?
Yes, I just give a very rosy picture, and to flip that on the other side, looking into next year, I think obviously conditions are getting much tougher now. First of all, say those interest rates obviously, of course, are coming down and probably much faster than we previously expected. And also, cost of risk is normalising back towards more normalised levels, so rising from very low levels, and therefore that's squeezing some sort of that earnings outlook. So that's under pressure. Economic growth across the Eurozone is weak. So if you're a CEO of one of these major companies, you've got a lot of capital, a lot of cash on the balance sheet, but you can't grow the business. And that's why M&A is really coming back into the scheme. How do we keep going? How do we get the momentum in our shares? By expanding further. And that's why, to a degree, you see UniCredit look at raising their stake in Commerzbank, looking at it as well, Bank of BPM. That's certainly picking up across the sector.
Philip, thank you very much. Philip Richards, Bloomberg Intelligence Senior Banks Analyst. We have a few things taking place today. It is a Monday. We get some data out of the United States. In fact, not today, this week. We get some data out of China tomorrow. We'll have market closures, many of them on Wednesday, of course, for New Year's Day, and a bit of data after that. That is it for The Pulse. This is Bloomberg.